Do you have a daily routine? Do you have setups? Do you have a playbook? If you're struggling to answer these questions, then I might have something for you. I'm a Stacey Burke style trader that enhanced the Stacey Burke system with some of his own elements. And in this video, I will show you a trade from last week, a gold short trade from Thursday. And I've lead you through my whole thinking process. So session preparation, session screening, entry, journaling. I show you everything, and I think this might help you to see how a real trading process looks like. So if you're interested, stay tuned. So what was the trade? It was a gold short trade, fake out high, continuation, low hanging fruit in my terminology. You see here how price traded into the New York session, and then I took a continuation here into third hour. This is my journal entry, so it was an open box breakdown. I will explain you what that is. Entry was 10:15 Eastern time. Target open box 1x expansion, and it was hit after 15 minutes with 180 pips R5. Rinse and repeat, because I take this trade all the time. And taking these trades, it really takes only maybe half an hour, maximum 1 hour trading a day. That's all I do. So let's go into it. So what are the basic patterns we're looking for as trades, just as an introduction? These are the Stacey Burke style major trades. You have reversal trades, you have parabolic trades, and you have continuation trades. This is a reversal trade. I typically rather go for parabolics and continuations. I mean, often you have combinations like in this case. So this is a pump and dump template on the higher time frame. We will look into that because you have 3 days of longs. Very overextended market, also very bullish, so we need to be careful. What am I doing in these situations? I'm going for continuation trade, so I'm really looking for the continuation of such a move. So I don't try to hit it early at the high, but I really wait for it to break down and to show me that it's follow through, and then I take it to the next range expansion that's showing on the chart. So what's my trading process on a specific day? I mean, I'm always starting at the weekend or on Monday to make higher time frame analysis. So I won't go into this too deeply now. So I'm really showing you the process on the day. And on the day, there is two major things to do. One is thesis generation. I always say you have to trade top down and bottom up. So you start top down analysis. So this is before the session, and these are the things you're looking at. And then during the session, you trade bottom up. So you kind of forget everything that you analyzed before. I will explain you why. And then you start at the very moment of the trading, and from there you think backwards, back to your thesis. So let's look into the gold situation. We start with a higher time frame analysis, and then we go down to the weekly template, daily analysis, and then we generate a thesis. So the process is always that you come from the high time frame, you look at all the critical elements, and then you kind of define a picture for yourself. What could be the scenario? What could be a trade? And then you write this down for you, that you don't do anything stupid in the session, but you only trade what you defined as a thesis. That's very, very important. Otherwise, once you do spontaneous plans and decisions, you typically do stupid things. So you really use your planning mindset. Here you are fully in your planning mindset. You are completely relaxed and calm, and you can use all the tools and analysis you have in a very concentrated way and try to do as much as possible beforehand. This has its limits. We will also look into that because, as I always say, taken from Peter Brandt, charts do not predict price. That's very important. So from a specific depth of analysis, it doesn't make sense to look any further, because then you really need to know what's happening in the session. So you only look at the structure, you look at risk rewards, liquidity distribution, levels, stuff like that. But then you really need to wait what the session does when it starts, because it's always timing, levels, behavior of price. So this is levels and a thesis, but then you need to wait for timing. At what time is price doing what? As long as you don't have that, you don't have anything. So let's get into it and look at what the thesis generation looks like. So what I'm always starting with is the higher time frame bias. So I always look at my 5-star template, Stacey Burke's ACB template. I will show you what that means, because I'm looking constantly for these 5-star setups. I don't trade them aggressively, but I want to be aware of them. So if I have 2 or 3 theses, and one of them is also a 5-star template, then of course I'm focusing on the 5-star template. So it's another layer of filtering. So what is the 5-star template? So we are looking for breakout or breakdown closes on the day before, especially in the second half of the week. So we are looking at a Thursday trade now. So Wednesday close in breakout is the classic 5-star trigger. Then we want to look at a couple of confirmations. Is it second half of the week? Yes. Are we at the month extreme? Yes, we are. Is a monthly level triggered? Is a new month time rotation close? Do we have first red day, first green day? So these are the things to look at. And then you would, if you trade this standalone, you would look at a coil. You want to have a parabolic day. You look at the MA ribbon. We will do that. And then you enter within the ribbon or leaving the ribbon with a stop loss above HH or 4. Take profit end of day or a specific level. So I'm typically not trading it that aggressively. I do my typical normal trading, maybe a bit more progressive, and that's it. I found out with back testing and forward testing that this makes most sense for me, because if I take profit at the end of the day, timing wise, it's just too often comes back and takes me out again. That makes no sense for me. So what does this look like? Here you see that's the normal rollover template to look for. So a breakout close the day before, and then that's this one here. Here's the breakout close, and then you see here parabolic day rollover. That's the EMA coil, then into New York session, a last stop hunt, and then it completely loses it and goes into range expansion. That's the higher time frame pattern to look at for the ACB template. So now let's look at the real ACB template in our situation. So here, that's my 5-star screener template. What you see on this chart is Trend Predator Pro. That's my indicator. This draws the high and lows of the month, the week, and the extension levels here, and it also shows you the bias and the context. On the other hand, I have my Trend Predator Fakeout. That's the colors of the candles, and this is in a configuration where it shows the breakout and breakdown closes. And then I have an additional indicator that just shows the Wednesdays to see where the switch to the backside of the week happens. If you're interested in that, Trend Predator Fakeout is for free. Trend Predator Pro, you can have a free trial, and there's an extensive manual that also shows all these templates that I'm showing you today, how to make the configurations with it. So let's look at it. We are in monthly breakout. So that's previous month high. We are in breakout, and we see the previous was also a breakout, and we are in 3 months of long. So it's pretty overextended. The week is also in breakout. It's not 3 breakouts because we have a fake out low here. So we are kind of a day 0 week, and now breaking out again. So it was an inside day on Tuesday, and now Wednesday broke out with a huge candle to the top, and now we have a breakout close on a Wednesday at the extreme of the month, so high close of the month in an overextended uptrend. And that's pretty much it. That's what you can see on this chart. And then for me, I stop make interpretation of that. So we are just in an overextended uptrend. We are at the very extreme at a Wednesday in a breakout close. So potentially on the next day, we might see a reversal, but we might also see a continuation. We don't know yet. So we just are interested and are looking deeply what it's doing. So let's look further. Thing I'm looking at is the weekly template. I mean, we kind of already did that now, so we probably don't need to go to the chart one more time, but I show you what the thinking about the weekly template is. So the weekly template, there is also a video on that in my playlist if you like to go in depth, but weekly template, it is one of the key elements of the Stacey Burke trading system. So you always have front side and back side. So front side builds up the week, liquidity distribution on both sides, and then back side Thursday, from there it typically spreads out, so you get a pump and dump reversal week or a parabolic continuation week. But especially around Wednesday, Thursday, we are looking at the key signals of the Stacey Burke system. First red days, 3 days of longs, a fake out high in my terminology, and then we potentially look after a level 3 for a reversal. In this case, as we already seen, we are on Thursday, we have 3 days of longs on the backside of the week, so we potentially look for a short, but we are careful yet because it's still bullish, so we don't have any sign of weakness yet. So here again, each day is different. We are now end of the week. I mean, Friday is a public holiday, so it's kind of Thursday and Friday combined. Here you're looking for 3 and 4, 5-star trades, and really look for the 3-day setups. You look where are the coils, but you stay open, as I say here. Be aware of reversal and blow off. So you really need to be careful also on these days. You don't push a short, and you will see I was careful with the short and I only took it pretty late, but you will see that this is typically still enough. So then going from there into the daily analysis, there is where everything kind of starts, and you really drill deep into your potential thesis. There I will introduce you to my heat map. That's this one here. This is where I consolidate all the analysis I'm doing on a specific day across my basket. And this is the analysis I did on Thursday 17th last week on all of these pairs. And here you already see a couple of things that we discussed. Here 5-star for me, gold is already marked, and all the things that you are seeing here, I am showing you those now. Context, you see already all-time high, careful with short. So it is still bullish, and you see here the colors. Month is bullish, week is bullish, the day seems to turn around. So this is something we are looking at right now, and I'm now going to the chart with you and show you what all these analyses are. So let's start with the monthly analysis. I will show you now everything I'm looking at. You will see it's a couple of things, might be confusing and a lot for some people, but you will also see that it's in the end quite simple. I mean, I'm not a friend of keeping it simple in the means that do simple things, but you need to keep it simple with all the complex stuff and loose parts you're looking at. And I will show you that it's pretty simple to look at these tools if you exactly know what you're looking for. Then you are very quick and finished in a second. So this is the monthly TPO chart. So we are really only looking at how does the current month trade in relation to the month before. And are we in an out of balance situation? So we see here the month closed here. That is out of balance because this is the value area of the month. It stops here and it closed up here. So we are in out of balance uptrend. So that's a pretty bullish situation. At the same time, we had 3 months of longs, and at the moment we are trading also in the month above the value area. So very overextended, and here at the extreme. I mean, we already knew that kind of. Then from there, I'm going to the weekly TPO, and I'm doing the same thing. So on the weekly TPO, let's do the same analysis. We see here that's previous week profile. You see value area high is here. We are closing up here, so it's a out of balance uptrend also on the week. So very, very out of balance, the whole thing. And we are currently trading also above the value area high of the week, ranging outside of value of the month, of the week. So this is also again another indication of a very out of balance market. So the same thing on the day. So that's the daily market profile chart, and you see here that's Wednesday closing in breakout and also closing and opening out of balance outside the value area of the day before. So that's pretty interesting, because once you have that, what you want to do is to typically mark the previous day value area high. That's this one here. And then I will show you what that means, because if you're closing out of balance and then it comes back in again and gets accepted, then you have a setup on the day. That means it typically, once it gets accepted, it rotates through the range of the previous day, at least to the point of control, but with a high probability to the other side of the range. So that's already a higher time frame thesis, and I will show you the theory right now. So this is out of my playbook again, and also there is a video on that, how to trade out of balance markets. And here you see exactly what we've just seen. Here, that's previous day, value area high and low. We had a close outside of the previous day value area high. And then you have two scenarios. Either it comes back in, gets accepted, rotates all the way to the other side, acceptance back inside, reverse, or it stays outside and then does a trend trade. So you always, in this situations, once it closes outside, you mark the previous day value area, that's the relevant, that's the key level on the chart, and then you are sure that you want to be sure that you're trading away from that. So you're either trading a bullish scenario or a bearish, but you avoid trading long, for example, into this reversal scenario, or short back down, only very late in the session with an intra-session setup. But that's the out of balance situation on the day. So now finalizing the thesis generation on the chart that I typically use for that. So this is again trend predator mainly on the chart that shows you all the high and lows of the month, week, day. 8 hour is the orange, gray is the 4 hour, and here you see the breach levels, and here the bias. So we now go through the time frames and discuss them individually. That's what I typically do quickly. So I look at the month. We already seen that on the TPO chart. It's in breakout, previous and current, and we are in 3 longs. So month overextended but bullish. Week in breakout, here's previous week's high. Here you see the green breakout level. So week also in breakout bullishly. Then day fake out high, previous breakout, 3 days of longs. So you see here the last day broke out. We have here the breakout close that we already discussed, and the current day broke out and lost the high again. So similar to the out of balance reversal down, pattern we just spotted, we see here a daily fake out high. So here we see below this level we are bearish. So there already we see things coming together, but if you look here on the lower time frames, they are bullish at the moment. So because the 8-hour here broke down and came back up again. So now we have a conflict, and that's why it also doesn't show a setup at the moment, because we have a daily fake out high and an 8-hour fake out low. So there we are careful then. Overall we see it's a reversal situation. So now we are in a fake out high continuation, potentially reversing back down, overextended because it's against the higher time frame bullish bias. And at the moment we have an 8-hour fake out low. So here is nothing to do. One thing to look at is still the MA ribbon. I typically look at that. Here you see, if you remember the pattern I've been showing you, this looks pretty nice, crossing over. So as long as you are below this MA ribbon, you are looking for a short. And this pattern also looks like a parabolic session. So we also will look into that later. So we have Asia putting a peak formation high, London peak formation low, now trading into New York. So potentially a blow off to the low, but we really need to lose this 8-hour level here. Otherwise, it's still bullish and contradicting. So that's the thesis. And now let's look at what I wrote on the heat map for that. Let's summarize thesis generation and look at everything I wrote on the chart. So this whole analysis takes maximum 5 minutes per pair. So here you see gold, it's a 5-star template because we had an out of balance close. We are month in breakout, out of balance uptrend because we closed outside the value area of the market profile. We are in 3 months of longs and we have a breakout close on the month. So bullish overextended. Week in breakout, out of balance uptrend. Also closed outside previous week's value area. Bullish, out of balance. Day, fake out high. We just seen that. It broke out today and came back in. So we have a bearish fake out high as long as we are below the breakout level. We have an out of balance downtrend pattern. That's what we just looked at. We were closing outside the previous day value area and now traded back in. So as long as we are below the value area, we are bearish. We have a breakout close and we have 3 days of long. So overall, at the moment, very bearish on the daily. But the higher time frames are bullish. So that means we have we are not sure yet. We've seen we have an 8-hour fake out low that's bullish. So as long as we potentially reclaim the fake out high level to making this a breakout, then we might even get another leg up. So for the moment, we need to be careful, as I say here. All-time highs, careful with short, overall very bullish chart. We are interested because it's a very out of balance, overextended situation, but we still have to balance a breakout continuation versus a reversal trade. We don't know that yet. The session hasn't started, so we really need to see how New York Open, Equity Open trades and how timing levels, behavior of price then looks like for our specific entry windows. Before we go into the session, maybe the theory behind this setup and situation out of my playbook. So these pages are out of my playbook, and here you see the major setups I'm looking at. My typical setups are not this case, the reversal trades, but they are rather the retracement days or breakout fake out continuation days. I just did a video on the breakout continuation, that's this one here, but for the sake of this situation, because also most people trade the reversals, I will show you how the reversals are traded and are also anchored in my playbook. So here you see reversal days. What are the reversals I am looking for? I'm typically looking at a reversal continuation counter extended trend. So a day that fakes out the high, higher overextended or reversing the higher time frames and the high time frame level potentially hit. So we have here a daily fake out high, daily fake out high after 3 days of longs. That's the daily bias, and we have the week and month. As you see here, we just seen this in the heat map. Breakout 3 longs on the week, breakout 3 longs on the month. So it's exactly this situation here, reversal continuation. How does this setup look like? You see here how I sketched this and how I'm thinking about trading that. You see here that the fake out can be on the current day, 8-hour fake out high potentially, but here especially the daily fake out high after 3 days of longs. I like it if the fake out was already the day before after first red day, but in this case you can forget this one here. It came up and we have a 3 days of longs with a fake out on the day. So what are your potential entries then? You see here, and either you get a fresh 8-hour fake out high for an entry, or you take an 8-hour breakdown, low hanging fruit entry, and then your targets are the low of the day or previous day low or range expansions. So we either take an 8-hour fake out high or we take the 8-hour breakdown low hanging fruit. As you will see in this case, this was how I traded this situation and why I will also show you, of course. Then the setups of Trend Predator. As you see here, previous day high, we want to have a breakout on the current day that turns into a fake out high. The type is continuations. Then the setup is a fake out high continuation, context, reversal, quality, 2 stars. So that's what Trend Predator will show you for this setup. Next stage, coming into the session, we are now looking at behavior of price and look to confirm the setup and an entry. How are we doing that? As discussed, we are approaching this bottom up. So we are really looking at what is happening at the moment in the session at first. And then we reflect backwards to our thinking of before. So we are checking who is trapped. We are looking at the intra-session setup. What's happening in the session? Then we reflect on the setup on the day and on our overall thesis. And this is rotating kind of until you get your entry. So let's look into this one level deeper on the theory side first. So that means if we are confirming an entry with my multi-timeframe logic, what is it that we're looking for? So we look at the multi-timeframe alignment of the bias across the different timeframes. So we breakouts, breakdowns show the trend. So this is what we already done. We have a daily breakout and so on and coming into the session, and now we have a daily fake out high. And the next we want to see is we want to finally confirm a setup. We want to have the daily, the H and the H4 aligned. And as we've seen, we have an 8-hour fake out low coming into the session. So there is no confirmation yet. Then we wait for New York equity open. We wait for the open box to print. And then after the open box into the 3rd hour, then our time comes. Then we look at the fake outs. They show the traps. We look at timing. Timing gives the rhythm. And then we look at levels, M15, M5 closes, and check for a confirmation of our entry. So let's go through this now, bottom up. So first is who is trapped. So there is a couple of different traps to look at. I have all of those in my playbook. So the classic ones are MW formations, half Batman, 3 pushes to the high, ascending, descending triangles, or very important for me is also the continuation trap. So once you break down, there is a little moment where it's not 100% clear if you get a W and it's pulling back up and trapping shorts, or if it's just turning around here and at a lower time frame fake out high and traps the longs before it does a continuation back down. That's the big question here to discuss. Then for the entry itself, you want to see, especially for a continuation entry, which we will get here, you look for the continuation trap. So you wait for the 8-hour breakout, and then you want to see some kind of trap for this continuation. And then you double check all these criteria. We will look at that later. And you want to be sure that it's not too obvious at that moment, also timing wise. So let's look at this on the chart, how this looked like at the New York Open. So now let's look at the chart, the critical time. This is now 9 o'clock Eastern time, where the 8-hour level closes. That's where I typically do my thesis generation or do another check for the session. And here now we want to look who is trapped. And for the moment we see we have a kind of an M trap with the fake out high on a higher time frame. That's the basis of our overall thesis. Then it was trading down here, and we get a W here at the low with an 8-hour fake out low. So it's kind of printing a range here. And you see here, as long as we are below the daily fake out level, we will never go long here. So we need to be up here for a long, and for a short, we definitely want to lose the 8-hour fake out low level, or even the 8-hour level. So, and on the other side, we have potentially a trap here. This is something to look at. And then we will look at traps going forward from here on the lower time frame. But for the moment, you have a trap at the high, a trap at the low, and going sideways. That's a parabolic session. We will also look at that later. For this now, we will need to see how the open trades, how the lower time frame traps look like, and how it continues on with behavior of price. So next is to look at the intra-session setup. So what's happening within the session? And as I always say, you can check this in my video of the session template. Treat a session as a riddle. So you don't know what's happening before. You don't try to make a projection and forecasting. Just look at what is happening and collect all the puzzle pieces for your potential entry, preferably into third hour. So what are we looking for? First hour, we have the 8-hour high and low, previous day high and low, close, and there is our thesis already coming from. Then it's trading into the second hour. We just looked at the chart. Then we have a new 8-hour high and low. We're looking, is there a stop hunt? We've seen potentially one to the high, and we have a trap at the high and the trap at the low. Then New York Equity Open trades. Then we think a bit about is it a pump and dump or a dump and pump? We will come to that. And then once we come into the third hour, we check the open box high and low and discuss, is this a breakout, fake out, or range of the open box? So previous day levels set the strike zones. We look at that. First hour sets up. First hour high and low. We will look at that in a minute. 8-hour closes, fixes the anchor levels, 8-hour high and low. Equity open sets the trap. This is what we will look for once we come back to the chart. Timing then gives the rhythm, and the third hour typically shows the trade. So let's look at the strike time heat map. So we are, at the moment we were looking at 9 o'clock. So we will see what is equity open doing. Then we will wait how the open box look like. There is a potential entry at 9:45 for the open continuation. If everything looks really good, but that's an expert entry, then we have an entry at 10 o'clock, a potential one. So that's the H1 rotation, if everything aligns. And then the real sweet spot is 10:15, and then the next 15 minutes going on for continuations or end session runners. But this is here the major times I look for an entry. Then the final puzzle piece for the setup is the open box. So I really typically wait for the open box to trade, and from the open box I decide how does this fit my overall thesis, and I take it from there. So open box, how to trade the open box. As the open box closes, there is three variations I'm looking at. And especially once you come into the third hour, you are at the extreme of the open box often. Then you want to check, is it a range expansion of the open box or is it a reversal of the open box level? Sometimes then later you get a parabolic reversal with one full expansions, but at the moment we are right after the open box, and there you just discuss, is it a breakout or is it a fake out? And this is what's critical also here in this situation. So then next is reflecting on the setups on the day. We discussed that we have an potential 5-star setup, and for potential 5-star setups you want to have parabolic continuation situations. So it could be a parabolic day, parabolic session, or low-hanging fruit. In this case, we already seen it's the other way around from this one here, but we have a peak formation high in Asia, peak formation low in London, and then we look for a potential blow off into third hour. So this fits very nicely to a parabolic continuation setup on the day. So then once everything runs through again, you reflect on the thesis one more time. So let's reflect on it. We've seen we have a 5-star template, we have a bullish higher time frames overextended, we have a bearish setup on the day. We are not yet sure, breakout continuation versus reversal. So this is something to still keep in mind, and we are careful with shorts, but we are open and aware that a 3 days of longs with such a bearish day might give a nice reversal trade. So let's go to the chart from here and observe what's happening with everything we just discussed. So now we are on the chart again, and now let's look how the session trades. So this is 3 o'clock here. We just have the 8-hour closing, 8-hour high and low. This is something to keep in mind. This could be a stop hunt. You've seen before what I'm looking at very often. You get the stop hunt at 15 minutes into the session. Here again, perfect 15-minute pivot. So this is already a bit bearish, stop hunt to the high, but still we don't act on that and just see what's going on. So we get here now the first hour high and low. This is always also interesting. So we always keep those levels also in mind, because first hour sets up. That's kind of the very first open range. And you still want to see, are we breaking out of that or staying inside? So for the moment we are trading inside and coming into the New York Open. Let's see where we are. 20 past, 25. This is New York Open here. New York Open then. We will mark that immediately. So we mark the New York Open level. That's a very important level to have on the chart. New York Open, this one here. So you typically also want to have this in your back. And what I'm also doing is I'm anchoring a VWAP at the open. That's also something I'm looking at. You will see why in a minute. So from there, we just let it trade and watch what's happening. New York Open pushing to the high. Here with the switch candle, the first bar, nothing to do. You're just inside, pushing up. You definitely don't go long from here, as we discussed, and of course also not short. So we really want to see what's going on from there. And now, interesting, you see it's turning around and does a switch candle to the bottom. So this is already looking like this could be another long trap here. And as soon as we are losing this New York Open level and the VWAP, this is pretty bearish, but we still have the 8-hour and 4-hour fake out low here. So no entry here at the 15-minute rotation. So we still observe and go on. Then it breaks down. 8-hour breakdown. Fake out high, continuation, low hanging fruit. Now you get the setup. This is the setup we are looking for. But now we are 10 minutes before the 1-hour time rotation, and we are approaching the 8-hour level. So this is definitely not a short entry for me. I wouldn't take it because it's too risky that it just bounces still from here based on timing. And also overall, if you look at how obvious this short was, I wouldn't chase this short into the end of the 3rd hour. Then we see what it's doing further. It trades down, hits the 8-hour level here, and we are approaching the 3rd hour rotation. This one here, breaking down into 3rd hour. So this would be a potential entry moment, but this would be very aggressive. So this trade I would not enter first bar from here because it's just too obvious. But I'm very interested and will go on the lower time frame and watch very closely what it does. So from there you see it's pushing up, and this wick here makes me immediately even more interesting because this is the open box. Here we can mark the open box. It's always good to have it on the chart, then it's even clearer. So from there to here, that's the open box. And as we discussed, we want to trade the breakout continuation of the open box. So if we get wicks into the open box low, this makes me interested. So here you could already debate if you take that, but I was still waiting here because for me the trade was a bit obvious. So then if you wait one more time, then you get a switch candle here slamming into the 8-hour low and the open box low. So this is again something to be careful, because if we close above here, it might very well just rotate back up again. So nothing to do. It's 10 minutes after 10 o'clock. One more candle, it's pushing down. So there we now have 3 wicks into the open box low and the 8-hour low into the 15-minute rotation. This was good enough for me. That was my entry. This is for me the lower time frame trap again. So if we look at that, we have 3 pushes into this level. This is for me also a trap. And then I already entered here, but if you were still hesitating, then you see on the next candle, this one here, you get even a 5-minute fake out high. So here the trend predator fake out colors you the fake outs and the switch candles, and here you see you get a 5-minute fake out high. So here the latest, as this candle here rolls over, this was the final confirmation in the end to take this trade. This was at 4:25, so pretty late. I was already in here with the 15-minute rotation. The ones that following me know I typically go in at that time. And then you just switch one more, and you see immediately here with the 30-minute rotation, you already hit here the other side of the 8-hour range. That was, here's an 8-hour level. You're pushing through that. And if I get such a collapse candle here into the 30-minute rotation, for me that's good enough already. So this is something where I just cut the trade. And if you see here, the stop loss was above these wicks here. The entry was there. Then you have an R. I think you have it a bit of a better entry here. It was an R5 already here with like 180 pips. And overall a 15-minute trade, and I just cut it here at the extreme after it hit the previous day value area low. You see 5 minutes after the open, it even completed the out of balance situation, and made also sense from that respect. But I typically just cut the trade here with a 30-minute rotation right here and take the money and call it a day. So that's the thinking. And you see, I mean, it's a lot of loose parts, if you want to say so, but all these things are not very complicated to look at. So it's all things that I mean, the preparation takes me 5 minutes to have the thesis, and then I just go on the lower time frames, watch how price behaves there coming in. I think about the traps, I think about the setup on the day, I mark the open level, and as soon as we are losing that and the VWAP, I know we are bearish, then I watch what it's doing to the 8-hour level, I watch the time rotations, and then into third hour I really watch the behavior of price on the very low time frame. And here it was a very clear breakout continuation situation, and then it's just a 15-minute trade for the next continuation leg down that's completed the setup, and then I just cut the trade and call it a day. And final then, you look at a journal entry. I just do a screenshot of the setup. I also post this in the community then. And here you see gold fake out high continuation, low hanging fruit. It was a fake out high here on the day, low hanging fruit, because it was a continuation trade down from the 8-hour entry 10.15 here, target open box 1x expansion. Here you see the open box 1x expansion is down here. That was exactly my target that was hit with the 30-minute rotation. You also see that this London Open level was there. It is the London Open level from yesterday. I typically let that on the chart, as you see here, London Open, also then New York Open, especially once they are not revisited. That's a naked session point of control. You know, there is liquidity because the London Open long traders were still in the money, and the price is just coming back down and take them out to then potentially come up again. So I just write in my journal, it's hit after 15 minutes, 180 pip R5, rinse and repeat. So when I come back to my journal end of the week, I remember the trade. That's the only thing that's important here. Don't make journaling too complex. It's just for you to review the day and the week and be aware of your mistakes, be aware of what you're doing well, and do an action plan for the week coming up if you want to change anything on your approach. So you don't need to write books about it. Just write down some comments. I sometimes, when I post this in my personal journal, I sometimes do some more bullet points below that privately on my behavior, if I liked it or what I didn't like. Then I can review that end of the week and make a plan out of that. So that's it. That's how I trade every day. Preparation maybe takes 5 to 10 minutes. Then as you see, trading from 10 o'clock, I come to the screen 5 minutes to 10. I typically take my trade from 10 to 10:15 and I'm out at 10:30. Then I'm journaling and that's it. So overall, I'm trading like 1 hour a day. And if I get an R4 trade in within that window, that's all I need to cover my bills. So if you like this thinking around trading, there's a couple of things you could engage, like the video, leave me a comment if you have a question. You can join my Discord. We discuss these things all day. You can look at my playbook where I describe this process and all the details of it in absolute depth. You can subscribe to my Trend Predator indicator. The Trend Predator Pro, as you've seen on the chart, shows you all the analysis you need, all the highs and lows, and also indicates you the setup. It's available with a 30-day free trial, and also the Trend Predator Fake Out that colors the bars. This is free actually. You can just go to my WAP, follow here the link, or just search for it on TradingView. You can just use that for free. It's really helpful to see the higher time frame fake outs and also the lower time frame entry confirmations. So that's it. Thank you for listening and have a nice day.